All right. Hello, everyone. Good morning, good afternoon, good evening. On behalf of BITOSA Global and its various chapters in the US, BITOSA Silicon Valley and BITOSA Tri-State, I welcome you all to this very, very fascinating session, which I know touches all of us, irrespective of the country, the region, the batch that we are from, because future of investment has taken even more status today given all the disruption changes that we are seeing worldwide. Just a quick introduction to all of you. I know many of you are new to today's call about the BITOSA alumni and its activities. BITOSA alumni is become a very vibrant community for our alumni, driven by our alumni. And today's session is a pure reflection that BITOSA alumni is working together to deliver some great value, some great insights to our community. We have about 14 chapters currently in India, of which 7, 8 of them are registered, and the rest will be registered very shortly. We have also been very active in the United States. We have 10 chapters in the US, all across the country. And I'm very proud to tell everybody that today we have 2 chapters that are engaged, the BITOSA Silicon Valley chapter and the BITOSA Tri-State chapter, which is being represented by Raj Chaudhary. With that quick background, it also gives me a joy to be on today's call. And I feel this is a very special moment for me personally, is because both the individuals who are going to drive this session are from my batch, the 1980 to 84 batch. So I couldn't be more pleased, more excited. These are my friends, my buddies, my contacts for so many years. And to see that we're all together on this call, sharing this with the rest of the BITOSA community is a special joy for me. This has happened for the first time. So with no more delay, let me hand this over to Raj Chaudhary, who is based in the New York, New Jersey area, and he will take these proceedings forward. So Raj, over to you.
And so let me see. Yeah, you can hear me all right?
Yes, we can.
Okay, great. So first of all, thank you, Arup, for organizing this and leading BITOSA. I know you have been very dedicated in this and taking time from your busy schedule and other things. So thank you. And thank you, Chandra. You have been great in helping us organize, so thank you. Now, coming back to the main topic and the speaker, today we are going to talk to Rajesh Srivastava. And a lot of us in our batch, excuse me, my voice has some issues, so please, I beg your pardon. Excuse me. So Rajesh has been, my batchmate, and more importantly, a great friend. We graduated together in 1984. He was in electrical engineering and I was in mechanical engineering. Rajesh has been in the US for past more than 25 years and currently resides in Sunnyvale, California with his wife and 2 lovely daughters. He spent more than a decade in volunteering activities, including Silicon Valley Indian Professional Association, where he was president in 1999 and 2000. He has also been very active in business groups and forums. He was the organizer of the first US-India Business Council meeting in Santa Clara, which was attended by very prominent people, including Secretary of Commerce at then President Clinton's cabinet. And he said a long goodbye, goodbye to long successful career in cybersecurity, working for major companies like Symantec and McAfee, and took a leap of faith to follow his passion, which is investing. And capitalizing on his analytical skills, he created a company in 2015 and called PriceSeries. PriceSeries was voted as the 20, excuse me, the 20 most promising capital market solution providers in 2018 and 2019. That's a great feat. And it was done by CIO Review magazine, also rated as a top 10 algo trading solution provider 2020 by CIO Outlook magazine. These are prestigious publications. And last not but the least, recently, very recently, Forbes had an article about Rajesh, his interview, and they termed it the best. They called him I'll put in quote, a seven-figure solopreneur. And that kind of sums it up. And having said that, here I present to you all Rajesh Srivastava. Also, we know him as Chintu. And go ahead, please, Rajesh.
Thank you, Raj. Thank you for that wonderful introduction. I was actually going through the list of people, and a lot of our batchmates are there on this call. So going back to Arup's claim that yes, this is probably looks like a 80 to 84 batch presentation, quite a bit. Anyway, our topic today is huge. It's a very vast topic. What we have tried to do is pick few narrow areas, try and answer a lot of your questions, as well as objective of this entire thing is that at the end of the session, you should walk away with something valuable so that you can make some of your own investing decisions. So with that, we'll go ahead and start the presentation now. I'll go ahead and start sharing the screen. Can everybody see the presentation? Arup?
Yes, Rajesh, we can.
Okay.
Thanks.
Okay, so thank you again. And let's start on this. One of the things which, a lot of people, in fact, when I was leaving my job at McAfee, my boss said the same thing to me. Hey, if you are such an expert, why are you selling advice? I mean, why are you not trading yourself? And I told them, no wonder I do this after market hours, because during the market hours, I'm trading. So this is my, secondary job, you can call it. Before we get into more details, let's set few things, legal requirements here. Number one, this is not an offer to buy or sell any sort of securities. So any names we take there, definitely we are not selling those or asking you to buy those. This is an educational webinar, and your participation is free of cost and voluntary. Before making any investment decisions, you must consult a professional authorized in your country. I know people are from Canada, India, and US are there, and you must get an investment advice before making any investment. And finally, and not the least here, the organizers and presenters of BITOSA Global, my company PriceSeries, and anybody associated with this presentation will assume no responsibilities for individual actions. So this is a very short. Yeah, go ahead. Okay.
Now I was saying that, so then let's dive into that, the meat of things. So tell us about, I'll get right into it, types of investments that, shed some lights on that, please.
Okay. So very quickly, let me just cover the very high level topics I want to cover today. Basic information on trading. How do you trade in the bull and the bear markets? Because COVID-19 has created a scare. How do you spot market trends? We will come up with a trading strategy, and this is not the only trading strategy. There are thousands of them. This is one of the novel ones. And I want you to walk away with that strategy and that strength. And also at the end of this, we have a free tool for you, which you can use to evaluate your stocks and ETFs. And this works in India, Canada, major markets of the world. So coming back to Raj, what you just asked, investment approach. So there are primarily two approaches. One is the fundamental analysis, whereby people look at the economic indicators, how the company will grow, where this industry is, how the industry will grow, what are the company earnings, PE ratio, multiple other things, and a very long-term view is taken in there. The problem I see with that kind of investing is, number one, from a retail investor point of view, even if there is a company which could, let's say Apple, in 1990s, even if I wanted to get more information about Apple, I would not get that information as a retail investor. While somebody as Warren Buffett or somebody else as a mutual fund could do an NDA with them, could go in and could come to know their plans, and they could decide to actually invest in that company. So the choice left with people like us is essentially, as a retail investor, is primarily technical analysis and DIY or do-it-yourself kind of things. And technical analysis kind of focuses on, hey, what's happening in the market? I don't care what the company is. I want to see if there is a trading opportunity. From a technical sense point of view, I will trade it, make money. It uses historical data, technical indicators, trends and triggers, a short and medium term view, depending on how you want to do. And retail investor just takes it, as I said, looks at an opportunity, executes on it, and moves on. So does that answer, Raj?
Yes, absolutely it does. Thank you very much. And now, so on the next topic, we want to know a little bit about what does short-term trading versus day trading versus long-term trading, what does it mean in terms of time horizon?
Okay, so let's look at time horizons of investing, multiple approaches. I mean, we all have heard this term, hey, I am a day trader, or I am a swing trader. I do for short term. I actually invest only for long term, multiple ways. So what are we doing? I mean, it's the same stock market, and people are taking different views of investing within that. Here, we just want to, highlight the picture that although you have the same, stock market or the same price movement, which is applicable to all cases, but then everybody is taking a different view in terms of the trading time. So day trading really takes a very micro view of things, and they look at chart types of 30 minutes to an hour, and they're typically trading for a day or few hours to a week, depending on how the trend is moving. Short-term traders typically do it for a week to few weeks, depend or 1 or 2 weeks, as it might, as the trade goes, and they would look at the daily chart, and then few weeks to few months to a year. That's where the medium and long-term strategy comes into picture. They are looking at the weekly chart or a monthly chart, and they also include the daily chart for certain areas. So it is the same chart, same data, but viewed by different people in different ways.
Okay, that's great. So one of the questions we got that people in this webinar who participated, one of the questions that we had is how do you see India market versus the US market? Because we are originally from India. Most of the participants right now are in India as we speak, and some of them are in Europe and US and everywhere else. So please educate us.
Well, that's very interesting, actually. Until today morning, when I started, just before this, I looked up. I was aware that BSE is a very old exchange. Didn't know it started in 1875 or something.
Excuse me, there's a slide. I think we are still on the old slide. Yeah, thank you.
Okay. So major differences, I don't see any major differences here between the US markets and India markets. They operate the same way. The restrictions in some of finer points, they might be different because of the jurisdictions and the laws, which are different countries. And that you are going to see that difference between, let's say US and Canada, although there will be a lot of similarities, but then you're going to see some differences. US is a more flexible and a very high volume, very volatile market. So you tend to get, a lot more revenue or generation happens in this market. India market is relatively lesser volume, very old market, from a stock perspective, but then I don't see much of a difference between the two.
Okay, that's fair. Tell us a little bit about mutual funds.
Okay, so we had actually looked at, there were a lot of people who were asking about mutual funds. And the concept is, I mean, the people coming in from different countries, different regions, mutual funds may have a different meaning for them. And also, I'm not a registered advisor, so I don't have the expertise in terms of saying that, hey, you buy a particular fund in India or you buy a particular fund here. But what I will do is I will educate you so that you can do this yourself, and you don't have to go to somebody else. So what is a mutual fund? So mutual funds have professional portfolio managers who will actually go and have an equity or an ETF or commodity portfolio based on a theme. And these themes could be, it is a growth fund, it's a sector-based fund, let's say healthcare fund or a technology fund, country-based fund, so that you have India, Brazil, China funds, or emerging market, combined funds, and any commodity. You could have an oil fund or a energy fund, and those kind of things. What happens is the daily NAV, which is the net asset value, has to be reported. This is required. This is one of the requirements by the government. And it is, unlike a share price which changes during the day, this value is calculated after the close of the market or end of the day. And this is daily. It has to be reported daily. It comes out at about 5 p.m. or so, US, US New York time. That's a US requirement. And so, but then, since it is a single value, there is no open high, open close, high low. There's a simple close value. But whatever we talk about here in terms of technical analysis is going to be applicable here, okay, in this scenario. So from a perspective of people asking which fund should I buy, totally depends on your interest. So if your interest is emerging markets, go and look for companies which have portfolios in emerging markets, and then you can do a comparison between the two. Okay.
That's great.
So that's exactly what I said. Choose the funds based on the theme of your interest. So you want growth, industry, or a sector. So this you can apply across boundaries, across nations. Just go, get the prospectus and look at, hey, if this is something of your interest. Now, before Raj, I just want to add one more thing. I mean, I've been in this business for 5 years, and what I see is a lot of people think that they will do random investing, but people have been typically doing investing, and that's why they're successful too, is in areas they have background in. So let's say a technology person, people like us, typically tend to invest and be successful in technology companies. Okay, so somebody trying to go into a different sector, yes, you can, just because it's growing, just make money, but then typically invest where your heart is, and you would know how things work in that area. Okay, Raj.
Okay, so now earlier you mentioned that individual investors, they can they preferred approach is technical analysis as well as opposed to fundamental analysis. Can you tell us the sites where we can learn about technical analysis? What are the resources available?
So technical analysis is actually a pretty vast topic, like fundamental analysis too. The only problem with retail investor is you don't get the right information. I mean, you could do fundamental analysis, but you do it based on the public information. Now, public information may not give you the complete, a 10-year plan for what the company is planning or what kind of products or markets or, other things which they are looking for. But beyond that, technical basis, Investopedia is one of the good ones. Yahoo Finance, Google, Bar Chart, Economic Times India. These are the ones you can, and in fact, Money Control also in India. These are the sites you can go to. They have sections of both, technical analysis as well as fundamental analysis. And, once you start looking at things, you'd probably get a grasp of and an idea as to what to look for. Does that answer that?
Yes, thank you. And I will encourage everybody who's interested to go through that and see what the information is available and feel comfortable. And I know couple of them, but not all of them. I will do that same thing for my investment strategy. Now, there is a $1 million question. So now, how do I find good stocks to invest in?
Everybody is asking that. Okay, so let's look at bull market investments, and then we will also look at the bear market investments. So when the markets are doing pretty good, where do you find good companies? I mean, typically everybody you talk to, or in fact my clients also sometimes, some of them will ask a question, hey, how do I find an apple today, which will grow into something big 20 years from now? The problem is that these companies are not shooting stars, and these are not companies you can spot very easily. I mean, even in 90s and 2000s, Apple was there. How many of us really bought into it? In fact, some of the Apple employees would have also sold their stock. So it's very hard to say. It is kind of a unicorn thing, and you can go after it, but probably you may not be able to get it. So what's the better alternative? The better alternative is right in front of us. So where to look for good companies? These are the constituents of top stock indexes. So do you know how the stock index is created? Let's say S&P 500 or Nifty 50. Financial professionals would actually go through and analyze the returns, the business side, the growth of this of a company, and then they select the real unicorns and they put them in that list. It's a prestigious list. If the list is there, because these are not the company, you don't want to invest into a company where you wake up tomorrow morning and you see it's gone down by 50%. Okay, these are companies which are there to stay. So why not? What you want to do is find a technical opportunities within these companies and you trade them. So some of the, so main indexes we talked about, S&P 500, Nifty, NASDAQ. Some of the sector indexes also are there, because if you are very specific to a sector like technology, semiconductor. So this is semiconductor index where you have AMD, Micron Technologies, Intel. Biotech, you have Nifty Auto, Ashok Leyland, Eicher, Mahindra, Nifty IT, I think IY, that's a mistake, a typo here. But this is HCL Technologies, Infosys, and TCS. So this is for bull markets. What do you do in bear markets? When things are going down. So one of the myths is that, hey, invest in gold or precious metals. Now, here is a chart we have. Now, this chart would tell you that there is no 100% inverse correlation. Okay, so that is when the markets are going down, don't expect the gold to go up. It could go up, but we have seen the random divergences happening all the time. So it is a good investment. It could be a stable investment, but does not guarantee that your money is going to grow. A. B, it does not also guarantee it's going to come down, because it could come down, as you can see from the chart. Now, other option which you have is shorting the market, but then again, you have to check with your broker for account requirements and how you do it. It's also a skill you need to learn. But there is something which all of us can do. Okay, and this is inverse ETFs. Inverse ETFs actually have 100% reflective relationship with respect to primary ETF. Here is a chart of S&P 500 is in green, and in gold you see SH, which is an inverse ETF. That is when S&P 500 index starts to fall. This is exactly when your inverse ETF will start to going up. Okay, and when the main index is going up, it is actually falling down. So what happens is most people are are more accustomed of trading long, making long trades. You continue to make long trades. It's just that your instrument changes. So when markets are going down, you can move into inverse ETFs, and they will continue to move up. And that's where you can park your money. Now, these inverse ETFs are there on Nifty. These are the names: Nifty 50 PR 1X inverse. I am not too sure if they are available within India, but they are available outside. I found these inverse ETFs on Access Direct website So for people, folks in India, if you are interested, you might want to call Access Direct or any of the other brokers and see if they offer, any inverse ETFs to you for you guys. So that in coming times, you don't know, we are in turbulent times right now. Things start going sour, this year, next year, whenever it is. At least you can park your money and you can grow your money also during that time. You don't have to panic. In terms of US residents, they got 70 plus choices in this area. They're sectorial, they're market-wise, the multiple of them. These are some of the examples for S&P 500. You have these QQQ, Russell 2000, and then different sectors within this. So inverse ETFs is the right way to go.
Okay, great. Now, let's see. Now, do you have any chart on market trends, I believe? Actually, yeah, I'm sorry. I just have a little bit problem accessing, yes. So
Okay.
could I talk a little bit about market trends?
So let's look at market trends. I mean, this is a chart of Square Inc., a very famous Canadian company. And look at, from a visual point of view, this chart is from 2016 sometime. And this is actual data. All the charts I'm going to show here are actual data, market data. It's very visually, you can see it's an uptrend here. You can see a downtrend. There's a sideways motion because this is bound by, two price levels, high level and a low level. And then you have a trend down and up. This is visually, you can do this trending. But then if we move into how do algorithms or computers and other people find out, there has to be a better way to do this, because understand that this is over a period of 2 years or 2 years plus. But then if you are at this point and it's very hard for you to figure out where the trend is moving. So this is where we have something called moving averages. And moving average, I don't have to explain to engineers what a average is. But moving average is nothing from that. You have a reference point, and then you go back. When you say MA 50 data points, and you do a mean of those, average of those. MA 100, it's also simply called MA type as simple moving average also. Here is a chart of Ford Motors, and this is the actual data moving in, and blue is a moving average. 200-day moving average here. Now, as you see, one thing you must notice that as the price goes below the moving average, it is termed as negative or what we call bearish. And when it is above moving average, it is bullish. And we'll delve into this a little bit more. And also, we'll combine this with dual MA. So we saw single MA. We are going to pick two MAs here, that is SMA 50 and SMA 200. And this is a pretty standard thing which you see in this industry, where a long-term bullish trend starts when SMA 50 crosses above SMA 200, and it's also called the golden cross. Long-term bearish trend starts when SMA 50 crosses below the SMA 200. And this is also called the death cross, okay? A simple trading strategy based on this is you go long or you buy on a golden cross and you sell on a death cross. Short trades, you buy on death cross and sell on golden cross. So let me show you an example here of Facebook. Now, what is happening is this is the data for chart for several years. And blue is what you see is the moving average of 50. And this is real data, by the way. You could have traded based on this information. And the red one here is the 200-day moving average. A green up arrow indicates a golden cross, and a red down arrow indicates a death cross. So from here, from this point onwards, you could have traded very well until this point. And that's a pretty good, probably a year and a half or more actually worth of trade. And so you find multiple opportunities, using this approach. And actual how many opportunities, how good opportunities you get depends on the market and how the stock is doing. Any question at this time, Raj? Or
No,
people have
yeah,
any?
yeah.
Please.
So I mean, one of the comments I will make is like this. I'm going back a little bit, so I apologize. But one of the things you mentioned is that in terms of spotting a good stock or finding good stock, and you mentioned a lot of time insider don't know. So I just thought about that, although a little late, but I wanted to mention there was a guy named Ronald Wayne in 1976. He was with Steve Wozniak and Jobs. After 12 days, he sold all his shares for $800.
Yeah.
So just wanted to accentuate that point that how do you know? So anyways, that was just a tidbit that I thought I'll pepper with. Now we can continue with the,
Okay.
again, same theme. So now we know how to trade. How do I find top sectors in stock?
Actually, before that, I got a few more examples and then I'll jump into it. Okay. So this was Facebook. Let's look at HDFC. This is from India. So a similar pattern. So what we are talking about here, you can apply to any stock, any ETF, cryptocurrencies, FX, foreign exchange, um, mutual funds also. So this concept you can apply. It's a generic concept. Takeaway. It's a good takeaway for you. And we have a tool also based on this, and we will actually, demo that. And there is a public link so that you can play around with that tool yourself. You don't need me. It is publicly accessible. After this, I'll have it up for a long time there. Okay, so one more. We have, this is Tesla. So a similar thing, we have, it starts off pretty nicely, but then the stock struggles for a while. And then, nowadays it is exploding. So as it moves towards the end, it will explode. But then, given the scenarios, you still have the validity of our basic premise, which is the dual MA, simple trading strategy. Okay. So if you are trading what you call long, buy on gold cross and sell on death cross. Apply it to inverse ETFs, bull markets, bear markets, any kind of financial instrument you have. Okay. So let's.
Okay.
This is what you were asking me.
Yes. So yeah, now we get back to how do now I know, like, okay, you give us some insights. How to find the top sectors or stocks?
So a lot of people, as I said, I mean, all this information is out there in public. I mean, it's just the basic intelligence or basic understanding, rather, not the intelligence, but the understanding how to approach so that you can figure out, you can find the golden nuggets here. So identifying the growing sectors. Here is barchart.com, and you have major sectors. You can actually sort on the 3-month growth. Okay. Now you know which sectors are growing. And within that, if you click on this further, this is actually an image, it's not a live website. But if you click here, you will find which industries are growing. And you go delve further, you will get to, based on the constituents, you will get to the companies which are growing at this point. So you can switch over, you can start, tracking those companies. Those are the companies you want to follow. And this changes, you can come back every month, every 15 days. As things change, you will know which particular sectors are going. Now, this is for US market. I'm sure this is there for every other market. I found one for India also. This is on ET markets or economic times. And they have the same thing. You have advanced decline they are using. Advanced decline is essentially a measure of how many stocks within a pool, whatever a defined pool is, whether it's defined by a sector or it's defined by an index. In a defined pool, how many stocks have advanced versus how many stocks have actually declined today and unchanged. There are 3 conditions there. So the ratio of advancing versus decline is considered to be a big financial value, ratio, because in an uptrending market, there'll be a lot more companies which are actually advancing. Their prices are going up, and as a result, AD ratio is going to be more than one. Now, on the other hand, when it's a bearish market and there are a lot more stocks which are coming down, AD ratio is going to turn it to below one. So that's how they look at it. Now, advanced decline, you can actually look at here. You have 8.38 or 3.60. So the higher the AD you have, the green side, those many companies are, actually going up, and you can delve it further deeper and figure out which particular stocks are, which are doing well. Okay, Raj?
Yeah, this is good. Now, this both of these, barchart.com, and these are publicly available free of charge.
Yes, these are publicly available. Anything I'm going to show here, you don't have to pay for anything, because I cannot show licensed information here. B, obviously, it's freely available. Just find it. You can get the link from here and take it from there.
Okay, sounds great. So now you talked about stocks, ETF, and mutual funds. What about futures and options? Because we often hear futures and options, and in parties and all we go to. And how do we go about that? So yeah, tell us a little bit about that.
So why the futures and options are becoming more popular? These are obviously derivatives of basic equity type equity. So it's a leverage. And as I said, for few things, it's location. Other things, it's timing. Here it is leverage. So leverage means that I could make the same amount of money by spending much lesser money as I would do in a traditional manner. That's what it is. So, so here is an example of, let's say a stock is there, a $10 stock. And if I were to buy 1,000 shares and trade those, I'll need a capital of $10,000. Now, on the other hand, if I look at, and the way I want to trade is because I know that it is going to go up. Either technically I have, or I have some other way of, predicting the future. And I say, hey, it's going to go up by 10% in next, 3 weeks or 4 weeks. So what I'm going to do is, I have first choice is buy the thing. That's a traditional way, and spend $10,000, hold it for that time, and sell it, whenever that time comes, when my exit time comes. On the other hand, I could go in and buy contracts. Each contract is 100 shares, for your information. And I could, let's assume that this option is available for 50 cents. And this 50-cent option actually gives me the difference. Let's say the stock is $10 and it's going to be $15 in 3 weeks from now. I get $5 on every share. So I will get the same amount of money back, but the stake I take is only $500 share, because that's given as 50 cents into 10 into 100, because 10 contracts I want to get, and each contract has 100 shares. I only spend $500 to get the same amount of benefit as I would do by putting down a capital of $10,000. That is why the futures and options are so effective, are so popular. In India, 95% of the trading is in F&O sector.
Really?
What is happening? Yes, 95%. Only 5% of the trading is the traditional stock buying, through portfolio or individuals. 95% of those guys, you find every city has young guys doing this. They're actually making crores of money. They're just doing this, leveraging the F&O market, futures and options market, and playing this thing. They have a little, so basically if they have a kitty of 10 lakhs, they get the power of about 10 crores of stock value, which they can leverage. Okay.
Yes. And now, one quick question here, or actually what I was reading about options, first of all, this sounds too good to be true on the face value, because $500 versus 10,000. In this example, you leverage, but this has the cost, right? Because options are contract which has time. It is considered time value of money. So if this is not for buy and hold, and as the time goes past, the value of option goes down. Please just tell me a little bit about that.
So yes, options actually they have what we call the value decay, and there is a Black and Scholes theory which goes around by that's how these are calculated, financial terms. But again, so what happens if the stock price does not go above 10? Okay, the scenario. So the scenario is you could lose maximum of $500 here instead of carrying a loss of whatever higher number. You could maximum lose the capital which you put in, and that's how options are very popular. Because if I have a kitty of $10,000, for example, then I could play these options, at $500 or $1,000, 10 times more. So as they say, the more shit you throw on the wall, something is going to stick. So if one of them is successful, you walk away pretty nicely, with good bit of money. Okay. But yes, in terms of losing, you could lose the $500 or the primary capital you put in for the option. And a stock, that will not happen. Stock could come back on the price. There is no time limit on that. And again, it could come back.
No, that's great. Thank you. And we hope that what we throw is something better on the wall so that sticks. So anyways, sorry about that dry humor. Go ahead, please, and tell us about some quick investing. If I suddenly hear something, how do I quickly get into opportunity, and how do I invest?
So as I said, you have to find or know of a stock. Either some friend tells you, you get a hot tip, or you actually go in and do the research yourself. You find a company. You want to apply, the second step is you want to apply the technical analysis. Again, I'm not against fundamental analysis. My problem is, depending on people's age, we are all, all of us are near retirement. We can't wait for another 20 years for reward. And that is not even guaranteed. So a lot of people in that boat, the younger folks probably could look at, hey, I can wait for this, but people in the 40s and above have to go in for what they see today. So you want to do a 6-month kind of a trade, apply technical analysis, find the right opportunity, use a good company so that your money is not lost, and then you invest accordingly. Okay, bull or bear market, you have both options to play, and you can make money when the market is going up, and you can make even more money when the market is going down. Let's have that philosophy, and with that, you can actually make good money in any kind of market. Okay, Raj.
Great. What is your view on US versus India market in general? Your view.
Also, outlook. This is a futuristic outlook is what we're talking about. So here is a Nifty 50 chart as of yesterday, last actual open day. And this is a real chart from a service I use. If you notice that this is how the market had dipped in March, and then it came back up again. Now it has already retraced about 61.8% of whatever the drop was. From a technical point of view, we look at retraces of 50%. So about at this point, it had already satisfied a technical requirement of a 50% retrace. So assuming that, the normal technical analysis, my view is the blue line here. The blue line, this is where the drop happened. This is the recovery we went through. And then this blue dotted line, number one, is the primary, from a technical point of view, that should be the path. going down further. Now, since 50%, up another 10% or so beyond that, we have been waiting for this market to go down. I mean, it still keeps going up. Fed keep pumping money in there. And this is the circle here indicates where we are today, as of today, or as of yesterday. The second option is that the market just does not go down because it is at a point where point of inflection where it could follow the normal path or it could follow an abnormal path. Abnormal path would be, from a technical analysis point of view, is it follows number 2. That is a complete V-shaped recovery. Okay, that's abnormal. But then, as a possibility, I'm not, I've not seen tomorrow what's going to happen in next few months from now. But that's a second alternative we have. A third alternative is the market drops a little bit, not the full extent as number 1, and then recovers again. That's number 3. Okay, so we are right now, the whole thing is boxed between these 2 dotted lines, and they are very important in the sense if the market falls below this dotted line on the downside, then we know we are going to have a very, very deep correction. Okay, if the market goes up, crosses the upside, then we know that it is, whatever we were thinking was wrong, the market is actually trying to do something else. Now, this being an election year for US, it is possible that it could go back up. It could have a perfect V. But then from a technical analysis point of view, we are expecting the blue line to be followed. Now, this is India market, and I look at US market. This is S&P 500. They're siblings. Okay. And in what we call a global economy, the market behavior has to be very similar. Not exact, but very similar. You see, we did the same thing. S&P 500 did the same thing. It came down and went back up, but then we backed up to about 85% recovery. India is at 61.8 recovery, 70% recovery. Oh, sorry, 60% recovery. We did a 85% recovery. Now, again, the same thing. We are here. We should follow number 1. We could follow number 2, which is a V-shaped recovery, or a 3 will happen. Now, the bigger question is, okay, Rajesh, you are telling me 3 different, very wide, approaches, or what possibilities, what could happen. How do I trade? At any given time, you should always use a stop loss. Okay. And you can do a trailing stop loss. For those of you who don't know, please talk to your broker. They will explain, and each broker platform implements it in a different way. You must have a trailing stop loss. And when the things are difficult, go for long and put a tighter stop loss. When things are surging ahead, when indicators and everything is nice, it's moving forward, then you can relax the stop loss a little bit so that, you can take more normal pullbacks. But then other pullbacks which are there, which could turn out to be very deep, you need to cut them off very quickly.
Very important point, Rajesh. And, that's, I have been asking you that question that a lot of times we look back and everything looks perfect, but going forward, what do you do? Because nobody knows what's going to happen in the future. So that point is very valid, is to have the stop loss on your investments, talk to your broker, and basically manage your risks. And that's what the name of the game is. So thank you. And now I'm going to do a little bit hurry up because we have to do a time check here. We have 10 minutes.
So let me just very quickly walk through what else I had to say. Because we have a time issue here. So investing in COVID-19 times, a lot of people ask this question. My view is follow the exploding sectors. Exploding are healthcare, biotech, biotech and, instruments along with that, medical instruments along with it, online technology, e-learning, because now students are not going to school. There's a lot more happening. Network bandwidth, 5G, because we are going to be using it for things like Zoom and all that. We do a network bandwidth, at the back end. So bandwidth companies are going to do, or that sector is going to do well. Telepresence communications companies like Zoom or pure telepresence in terms of either medical, telemedicine, and those kind of companies are probably going to do pretty well. E-retailers, we already know, are doing very well. Delivery logistics, because none of us are going to go out, at least for some time till the vaccine comes by, we are going to see. And again, the trick is find the sector constituents and identify the top companies to trade. Next market crash, I get this question a lot of times. It is funny. Well, I wish I could tell, but sorry, I'm not a soothsayer. Sometimes it becomes very evident, but then it is not really evident many times. But then stock market always has the risk of a crash. It could be coming next week, next month, or next year. Nobody knows. But then you should trade as if it's coming tomorrow, because that's when you will have the discipline of risk management.
Okay, so now can you share something about what you have done, and where do we go next?
So here is the tool I'm going to give you guys, and I'll do a demo of this very quickly. So this is a free tool. You go to my website, PriceSeries.com, and here you will see what is called a live chart right in the top right-hand corner. And once you click on that, you're going to see a tool like this. And give me a second. Let me very quickly move to the live tool. This is actually an image here, and do a brief demo to you. Okay, just give me a second. Okay, can you see it, or I think is there a sharing issue?
No, I can see the chart.
Oh, you can see the chart. Okay, so let me see. Yeah, I have to do a new share. Okay, can you guys see the? Now, do you see the website?
Yeah, the website we see. Yeah,
okay.
It's refreshed.
Okay, so here is, as soon as you get to the website, live chart is right at the top, and you're going to see this chart will come up. And this, guys, is applicable. This supports a lot of countries in the world. This works for India, Canada, UK, US, obviously. So I'll go through this. Here, this is, we already talked about MA50 and MA200. The blue line here is MA50, and this is MA200. Your key to success here is when the blue line is above the red line or the orange line here, that's when you buy. And otherwise, when the blue line is below the orange line, that's a sell. Now, we have an example of, let's say, one of the important stocks, GE here. You can actually also select and use a weekly, and you get the picture of how GE had worked over the time. Right now, if I were to make a decision based on the simple strategy we talked about, orange is above blue, I will not buy it. Okay, let's look at SBI, State Bank of India. Again, State Bank of India, BSE. Again, it just went down. Okay, I will not buy it. From a weekly basis, if you look at from a daily basis, again, depending on your term, it's the same thing. I will not look at it. Let's look at Netflix. NASDAQ, I'll buy it. The blue is above the orange. This stock is moving positive. Okay. Then let's look at another India one, Nestle. Nestle India, BSE. I'll buy it right now. I mean, you can explore. Yes, this is a possibility. Now, whether you do it or not is a different thing. But this is a tool you can use, um, you know, to look at. Like, let's look at an ETF, SPY. Okay. Right now, it's trying to, from a daily point of view, it's trying to be negative. I will not, I might do a speculative buy, but investment point of view, I would not do this. So
Okay.
I think
Rajesh,
with that, I'll
yeah,
conclude.
right. I know that there's a lot more to learn and a lot more to explain, but given the interest of time, I do need to ask my personal question quickly and just wrap it up. So one of the questions I have is like, what about psychology and sentiment? Like, for example, sometimes we get too attached to a stock or we start hating a stock. And the second quick question is about the discipline in terms of investing. Sometimes I miss the opportunity. I say, oh, I'll do it later, and then it's too late. Please, quickly.
So I think the first thing which you have to do is get the emotion out of the trading. If you have the emotion within the trading, that's a problem. It's a pure business. So here, in this case, it says buy, and somewhere here it says sell. You have to listen to the indicators, not your heart. I mean, you might love this particular stock, but then, if you don't act in time, the coming down or the bear market is 3 times faster than that climbs up. Imagine, look at this chart itself. It took so much time to get there, and within a week or 10 days, it is back here.
Yes.
So the more time you spend thinking, you're going to lose money. So the discipline is very, very important. Okay. So discipline is whatever you follow. I'm not saying you follow this particular one. If you have a better strategy, follow it, but go with the strategy. The technicals do not lie, okay,
Yes.
at any given time. So if you have that, the other thing is figure out what works for you. Because
Yes.
if there is a strategy which works for you, doesn't matter. There might be 100, better strategies out there. But if there is a consistent strategy which you can use again and again and make money 3 times a day using that, use that. Okay, we come from Birla Institute of Technology. Do the business like Birla's. With that, I'll end this. Thank you.
Okay, again, so I want to quickly thank Rajesh for wonderful insight. And even though you and I talk some time to time about another issues, but has been for me personally, and I'm assuming I'm speaking for a lot of you guys. We learned, a good deal of things. This is very valuable, and I appreciate you taking time away from all the other things you have to do. So thank you, Rajesh. It has nothing but pleasure. And having said that, I will actually hand it over to Arup and Chandra for any final words.
Thank you. Thank you, Raj.
Well, thank you very much, Rajesh. I think this was very insightful. I personally learned a lot. I'm pretty sure many people in the audience who were glued to this session have learned a lot as well. I know we had many people watching it live on Facebook as well. I know we were unable to answer all the questions, and there are many of them. So, to all the people on the call, we will try and get those answers. We're going to request Rajesh to please spend some more time and give us those answers. I also want to thank Raj for conducting, being a great moderator, making it interactive. I love that style because that brought in a change and a variety in terms of the sessions we have held so far. So thank you, Raj, for doing that as well. I also want to thank the BITOSA global team, the team that actually works in the background to make these webinars happen. And there are many of them, starting with Chandrasekhar, who is with us on the call based in Silicon Valley. We have Neha Vatsala based in our BITOSA Pune office. We have Varun Pandey, we have Ramesh Agarwal, we have Anupam Srivastava from our BITOSA Bangalore office, and many other people who have worked very hard, very tirelessly to put this event together. So thank you to all of them. As I mentioned earlier, this is a session for BITOSA alumni run by BITOSA. So this is ours for us, as I like to call it. So I encourage everybody on the call to please be part of this movement. Please tell us if you would like to participate as a presenter, as a moderator. We would love to have you. Please let us know, and we would love to connect you with our people. The email where you can reach us is Shekhar, spelled SHEKHAR .bitmesra @gmail.com, and that's Chandrasekhar's email address, and he'll make sure that we review it and we position you for one of these webinars. So with that, once again, I would like to thank everybody for coming, being part of this, joining us. A special shout out to the 1980-84 batch for being on
Yay.
the call, supporting both Rajesh and Raj. So thanks everyone. Best wishes. Be safe. Bye now.
Bye.
Thank you. Bye. Bye, everyone.